There is something you have not heard yet today, and that is our new product called SafeTank. Our website is called SafeTank.ai, and the company is called Gondola. My name is Brian Dumont. I'm the CEO. I've been in this business, creating this financial product over the last 20 years with my private wealth clients. We are now creating the team to bring this to the mass affluent through AI automation, as it says, of indexed universal life insurance. It's a $3.8 billion business. Last year alone, increasing at more than 3 times the rate of all other insurance combined. And that's my introduction. Go.
Hello there. I'm John O'Grady. Nice to meet you guys throughout the day. I'm Chief Experience Officer and co-founder, and very excited about the product.
All right, let's move along. So what is the problem that we are addressing? Well, there are 3 major problems that we are addressing that exist if you know anything about finance, which many of you know a lot about finance. Number 1, if you invest in the market to keep pace with or stay ahead of inflation, what do you risk? You risk when there's a downside, right? When there's a downturn, you can lose 10, 20, 40, 50% of your portfolio the year before you're ready to retire, and then what? You don't retire, right? That's an issue. What about number 2? Well, if you're worried about that and you put money at a lower risk, then you don't earn what you're supposed to earn. Like in a bank, you can get 0.5%. You can't keep pace with inflation, especially net of taxes. And third, if you lock it away into programs like 401ks and IRAs just to get tax deferral, what do you get? You don't get access to your money when you need it. And if you do need it and you have to pay taxes and penalties, you lose half of what you've got, right? And what else do you lose? You lose opportunity, you lose the ability to buy your dream home, to fund family emergencies, or anything else that comes along. These are the 3 main problems that a SafeTank addresses.
With the SafeTank, you're protected from market volatility, super important. You pay a whole lot less in taxes, which is huge. You're able to have access to your money for life events. When life events happen, you're able to access that money, which is a unique opportunity.
And let me just add the footnote there, access your money, 3 to 5 days, no taxes, no penalties, no application, no credit check, it's your money. How does the SafeTank compare in historical terms to other products? Well, if we look at this 25-year chart of comparing SafeTank performance against the S&P, here's the main difference. The S&P, of course, has great upside, but it also has downside. SafeTank eliminates the downside entirely. You'll see on the chart here that every time there's a 0% floor, that's what you're getting on the SafeTank sign when the S&P tanked. As a result, over 25 years, you'll see that if you invested $100,000 a year for 10 years in this product starting 25 years ago, you would end up in our low volatility SafeTank at a $3.8 million tax-free nest egg versus the S&P at 3.4. We also have another more conservative SafeTank model called no volatility, and that would be at 2.2.
So how does it work? So this product has been around for decades, right? It's been exclusively maintained by the wealthy families and an opportunity for them to use as instruments to achieve tax-free growth. With SafeTank, our breakthrough is the AI automation that does in minutes what previously used to take months to get done. Okay, so 1, instantly compares illustrations across multiple carriers, analyzes demographic and financial variables in real time, applies our secret sauce to identify the optimal policy configuration for each client's unique profile, okay, and eliminates unbelievable amounts of fees, management fees along the way. So automation in the insurance industry is huge, right? They're kind of dinosaurs when it comes to technology. We believe our automation will help completely change that aspect of it and make IULs a much more attractive option.
How do we make money? So SafeTank makes money on what we call policy first-year commissions, as well as subsequent commissions. Every year there's a premium paid. These are long-term products. They are not one sale and done. You keep these products probably for the rest of the client's life in most cases. Just to give you 2 quick examples. Let's suppose that in the mass affluent America, someone's able to save $50,000 a year. Not unlikely, right? That's a relatively small amount. What does SafeTank, what does Gondola make on that? Well, we make 47.5% of that amount in the first year alone, which would be a $23,000 plus commission. And Every year thereafter, another 3%. Total, over 10 years, we make over $37,000 on a $50,000 premium. As an example, what if you have $1 million premium? There's plenty of people who can pay $1 million premiums today, right? What do we make? In the first year, we make almost $500,000. Lifetime, over 10 years, we make $750,000 on that single sale, right? And what else do we know about that? We know that if somebody likes that product, is that going to be their last product purchase? No. They're going to buy another one in 2 years, another one in 5 years. As their wealth grows, they're going to need additional safe tanks for themselves, their business partners, their families, etc.
And just to go back, we believe with our automation that in 4 years we project we'll be nearly 10,000 clients strong. The market, last year, the IUL market was $3.8 billion opportunity, which is huge, which was 24% of the overall life insurance market. Policies in the IUL space grew 10% year over year, a little bit higher than that last year. And then the mass affluent market, people with $50,000 to $500,000 to invest is really underserved. So there's a huge opportunity for us there.
It's virtually untapped, and for this reason, because advisors have to put these products together, knowing everything they have to know about that person. They have to know everything about all the carriers. They have to be able to compare all of those products. And if you have a heart condition, you can't go to that carrier, you have to go to this carrier. It takes dozens and dozens of hours to put one of these in place. It is not possible at scale, which is why advisors only really offer these to people who maybe have $10 million, $20 million, $100 million, right? Because they just can't serve this market. Our AI automation allows us to serve this market end-to-end, touch-free. That we believe is going to be 70% of our market. The other 30% of our market we believe is going to come from what we're going to call our private wealth clients, which will be higher touch. How do we compare to other types of investment products? Look across the top. Growth potential, we're in the medium to high range, 6%, 8%. Market risk, none. Why? It's not technically in the market. These are indexed products. You're getting a credit rating similar to what you would get in the S&P 500 or another index or another number of other indexes. Liquidity, 3 to 5 days, no questions asked. You literally just sign a form and it's yours. Tax treatment, tax-free in and out. Everybody loves their Roth, right? But what's the problem with the Roth? They can't put money back in. You can take money in and out of a safe tank as many times as you wish. Quite amazing, right? And early access penalties, no. You can put money in the first year and take money back out the first year, no penalties. Quite interesting, right? Can you do that with a 401k, an IRA, real estate, bank savings? No, none of those. So you can do what's called a 1035 exchange, no tax consequence. There you go. So we're talking about individuals, primarily retail market, but we can also do this with, for instance, it makes incredible executive benefits packages. Right? You can double bonus the tax on it to the person. The company can pay the premium, and literally it can be transferred ownership to the executive. They walk away with millions of dollars, tax-free, funded, completely liquid.
So the validated market does a huge opportunity here. Just some of the key points from this is that insurance automation works, right? When we look at just a couple competitors, Lemonade and Ethos combined have nearly $1 billion in financing right now with Sequoia and SoftBank. So there is a market here. The demand is real. With Paradigm, another competitor, not doing exactly what we want to do. They have 8,500 customers, clients as of today. So they prove that the market is real.
None of these, by the way, have AI optimized anything.
Correct.
Right? That's what we're basing this company on from the get-go. We have an MVP. It's in its primary stage. It's not really online yet, which I think we need to get to that point in the next few months.
Q1, Q2?
Q2.
Definitely?
Definitely Q2. So the carriers are really manufacturers, right? They're not distributors. We're essentially a distributor. We're not a manufacturer. We're not creating the IUL product, right? All we're doing is we are taking rebranding, calling an insurance product that's really, a lot of people are afraid of the word insurance, right? They've had a lot of bad experiences, We're using the word SafeTank to draw them in, to explain what that is essentially at a high level. Once they understand it conceptually, which is rebranding the insurance industry, it's not about death benefit, it's not about death, all of that, right? Then we have the technology that allows us to position what we have as expertise in the field with technical expertise. We have 2 technical partners. We haven't talked about our team very much yet. We're going to. One from Goldman, he was the architect at Goldman and JP Morgan, incredible guy. And the other one from Herbalife, CTO there for a dozen years. These guys can build, right? And so it's the combination of these 2 things that makes it unique, what we have. And that's what the automation will allow us to do. It'll allow us to target various communities. For instance, the Latin community, very underserved, right? International people in the US or not in the US, but who want to invest in the US because they see it as the most stable. We have carriers that you don't have to be a US citizen to get this. You can have just one nexus literally to the US, which is a company, an investment, a property, something in the US, and you can apply for a SafeTank, right? So a lot of communities we can target. Yes? Okay. This is our team. We've already talked some about the team. John, you want to mention some more?
No, I just think we have a very diverse team. They bring combined about 160 years of experience from technology, from a very deep knowledge in insurance, and then Apple, marketing, and startups. So I think the experience from the team just really speaks when we're together. We're doing good things. We're small but mighty.
I just want to mention one thing about John here. He is one of the earliest guys at Apple at the start of their retail stores, the Apple Store. John was at the very forefront of that. So he's taken that customer experience and applying it to this new market. What are we looking for? We are looking for a bridge loan right now. $905,000 target, more or less. Convertible notes, we are flexible. Anybody who is interested in this, we'd be happy to talk with you. This is early on, but we believe that it's going to grow quickly. What are we going to build? We're going to build the platform, the technology, from the ability to compare the illustrations from all the carriers, the ability to match people with the appropriate best carriers, and the back-end workflows that are all about underwriting, which is a very, very labor-intensive process that we are going to minimize and present in a seamless way to the public. Thank you for staying, guys. I really do appreciate it.
Thank you. Thank you.